Hi everyone, today is Tuesday the 31st of March. We are now about an hour and a half into the US session. Actually, no, just 40 minutes into the US session. And we're going to talk further to the comments made yesterday. So if you look at the video yesterday, you will see that I spoke about this area here. So despite me maintaining that there's a potential 1,000-point pullback still from this area, I did speak about this coming above the 20 moving average here. So I encourage you to look at that video. I might just clip it in. Can we maintain a few good hours? So that takes us into tomorrow, the 31st of March. Can we maintain a few hours above this? If we can, then we've got a bit more, the market might just be a bit more forgiving going into that 6th or 7th of April announcement. So that's a key date. Around 14 minutes into that video yesterday, you will see that I spoke about this coming back up. So that is where we are right now, and that's quite impressive. Another thing I spoke about yesterday that I'm just going to remind ourselves of here, I encourage you to look at the change in the NASDAQ relative to the ES. So the NASDAQ and the S&P, just look at the change ratios, and it gives you a good indication in terms of where the underlying strength is. And we could see here that the NASDAQ is leading that underlying strength because it contains constituents which have a lot of weight to drag the other indices up or down with it. So what we have here is yesterday we had this in negative territory, whereas the S&P was in positive territory. And for that reason, we had that overall weakness, underlying weakness. Despite yesterday, at the time of posting, the S&P was up. I said that there would be this underlying weakness. It's not just based on that. We then go on to the volatility premiums, something, as you know, we assess daily. It is actually the start of the session. We look at this, and you can see the volatility premiums are coming down now from a few days ago where they had actually hit a premium of 14%. You can't see it here, but we did get as high as 14%. And now we're down to a premium of about, where are we, 6, 7, 8? Yeah, about 8%. So markets have a temporarily positive outlook for the probably the rest of the week, but definitely for the rest of the day today, where we see the S&P now up 95 points. So the question now is, where are we going to go from here? I hope and expect we get a pullback right up to here to the 6571. Likely, we've seen it's happened in the past. We've seen it test this 200 moving average resistance line. We've seen some strange activity here at 11 o'clock. Donald Trump loves 11 o'clock. I don't know why, but that time seems to be quite special. Today it was 12 o'clock, was it? Today I think the spike was we had a strange spike at some point today. I can't find it. Yeah, this one here. It was magnified at the time, but that's where things start to happen. But anyway, something happened on the 21st. You had this 11 o'clock time. Prices spiked up to there. It was a typical pump and dump. And what we have now is that as a kind of benchmark for where I expect activity to take place around this level here. That's 6745. So I don't think we're coming back as far as that, but certainly around sort of if we keep some divergence in play there. So certainly I think we're going to come back up to 6571 and possibly breach that to around the kind of 6600 mark. Please don't get me wrong, I am still a bear in this market. You'll remember from my previous video that I've spoken about these divergences. So just moving back into, we're back on the S&P here, but the weekly view, going back about 10 years, you can see here on the 400 moving average line, you could see how these crashes. Have I got one going back further than that? Yeah. So this is around Brexit, that sort of timing. And I can't remember what other volatility was taking place in the USA, but we had, when that crash happened, we were 19, so call it 20% away from the 400 line. And that number after crashes is, 18, 19% here from the 400 line. Through COVID, it hit that 400 line. So there was excessive global panic at that point. So we can ignore that. But the fact is, in fact, it came down as far as the 400 and then started baking, started moving up from there. Again, 18 to 20% here on the next crash in 2022. We've got some compensation there, so 23% deviation from there, 23% again in the 2025 crash. If I recall correctly, that was the tariffs. So these numbers are pretty consistent. So right now we're still sitting at 43% deviation from the 400 moving average. Now that's quite a significant number. So it was off the back of that I said that, look, we have to have some kind of pullback to at least this support level here, which is 6099. So we should see the S&P crash to those kind of levels. So is it £1,000, 1,000 points from where we're at right now? No, but there's 400 there, and then you always have that overextension, which kind of takes us to that 1,000 point decline line. So I'm still very much over the medium term. When I say medium term, through April, I'm expecting Donald Trump to say something that, you know what, we're going to go in and start ground operations. He's going to probably use the nuclear word a few times. There'll be some panic in the markets for sure. I haven't got the calendar in front of me. I think FOMC is done. There is some kind of important announcement coming up. I think this week. I need to check that out. Please do see what's happening there. So all in all, I think this, if we can just maintain that strong ratio over here, the ratio is just getting stronger. We've got the FANG stocks as well. The FANG stocks up, the FANG index is really interesting. Look, that tells you straight away where the strength's coming from. So you could see here. So FANG, basically the 5 big heavyweights out there in the markets: Google, Tesla, Meta, Nvidia, and Amazon, and I can't remember who else. But this index contains 10 of creates a index of 10 of the big heavyweights out there, and you could see they have just signified some huge strength today. Now I think this is off the back of Nvidia's news. There was some news around Nvidia today saying that they've beaten something or updating yeah, 2 billion on Marvel, so they've made some big investments, so there's some strength coming. I think maybe off the back of this or wherever that, take this, there is an element of truth to what I'm about to say. It sounds somewhat conspiracy theory-esque, but it's not, in my opinion. I've done this for so long. It's that the markets are likely to determine what kind of news is required out there to almost justify its action. I know it sounds ridiculous, but that's something which helps me understand where the vision of the markets are. Anyway, so that's where we are. I think I'm going to call this a shorter video. Let me just see if there's anything else that I need to think through right now. Again, that same diagram on the Nasdaq as well, you could see here. Is that 20? That should be a bit more, so it's about 25%. Nasdaq got a little bit more volatility here. You see historically, and I'm going from the 200 moving average here. Let's just double check that. Yeah, the 200. So we've got kind of 10% there, 3% there through the tariffs crash, and now we're at a 25% deviation. So the markets have to come off. They can't continue with this level of strength, and they will fall back into their mean. That's what a mean is, right? I know the CFAs and the MBAs out there aren't going to like what I say in the way this kind of crude approach to reviewing the markets. Of course, it's much more technical than that. And, I don't want to undermine all these stats and whatever else is out there to make this all sound important. It is very straightforward, okay? Look for diversions from the mean, look for overextensions on those diversions, keep an eye on the ratios, keep an eye on underlying strength, and the news, of course, and it gives you a strong opinion. So right now, to conclude this weather report, underlying strength right now, temporary reversion, possibly into 1st or 2nd of April, maybe some bad news or some worrying news to come out off the back of that. So that's when, we start seeing that tank. Yeah, there is something else to be said around seasonality, but I'm going to bring that up in another video.